If you have been trading for a while, you are likely familiar with the MACD indicator. But what so many traders don't know is that you can change the settings of the MACD to make it more effective and easier to use. So in this video, guys, we are gonna take a look at 4 MACD settings that you can use to improve the effectiveness of the MACD indicator. We will take a look at these settings in a step-by-step manner and talk about how they work and why you should use them. But yeah, guys, let's not waste any more time on this intro. So without further ado, let's jump right into it. Alright guys, so let's start this video off here by opening up a clean chart here in TradingView. Right now as I'm speaking, I'm looking at gold on a 5-minute time frame. And let's start here by going up to the indicators tab, and we want to of course open our MACD indicator, which stands for moving average, convergence, divergence. So let's open this one up. So as you can see, now the MACD indicator appeared here on the chart. And this video will not be about how the MACD indicator works. I have actually already made a long video about how the MACD indicator works. So if you want to learn more about the MACD indicator, I will make sure to leave a link to my video about that up in the corner in the eye of this video. But as you know, this video is all about the MACD settings. So now guys, let's take a look at the first setting here of this video. The first MACD setting we will talk about here is something I learned in one of my favorite trading books. It's called The Art and Science of Technical Analysis, and this is the settings that is recommended here by Adam Grimes, a trader with more than 20 years plus of experience. So guys, now let's take a look at exactly what settings he uses. So what we want to do here is that we want to go down to the MACD indicator and we want to press here on the settings tab, and you want to make sure that you are on the inputs tab right here. And as you know, if you have watched my video about the MACD indicator, the MACD line consists of 2 different lines. We have the fast line and we have the slow line. And the normal settings for the MACD is to have the fast length at 12 and the slow length at 26. But for these special MACD settings, we want to change the fast length to 3, and we do want to change the slow length here to 10. We also want to go down here to where it says signal smoothing, and this is basically the signal line, and this is a moving average of the MACD line. For the signal smoothing here, we do want to change this one to 16 for these specific settings. And we also want to change both the oscillator moving average and the signal line to, right now they are an exponential moving average, but we want to change both of these to become a simple moving average. So we change the oscillator MA type to SMA, and we also want to change the signal line to an SMA as well. So if you now take a close look at the MACD indicator, it can actually be quite hard to see the difference. So what I want to do now is that I want to open up the normal MACD indicator once again. So let's open up another MACD indicator, and now you can actually see that they indeed are a bit different. So now the upper MACD is the MACD with the new settings, and the lower MACD is the normal MACD settings. And what you will be able to see here is that the new MACD indicator will be able to react faster to price movements. So what do I mean by this? Well, if you take a close look at this movement right here, we can see that the price went from going down here to moving up. And if you take a close look at the MACD indicators here, you can see that the new MACD with the new settings will turn positive. You can see the histogram turns green here much faster than the previous MACD. And the same thing is also true when we start to see, you know, the price start to move down here once again. You can once again here see that the MACD with the new settings turns red right here, while for the normal MACD we had to wait for 2 more candles in order for that MACD to turn negative. So what we can clearly see here is that the new MACD settings will react faster to price movements. So this of course leads to the question, does this mean that, you know, the new MACD with the new settings is always better than the old MACD? And the unfortunate thing here is that when it comes to trading, it's usually not a yes or no answer like that. What we do know is that the new MACD reacts faster to price movements, but at the same time, because it reacts faster, it will also give more false signals. So you may of course wonder, in which scenarios is the new MACD indicator better? Well, since it reacts faster, it makes more sense, you know, if you are a short-term trader, you maybe trade on the 1 minute time frame, the 5 minute or the 15 minute time frame. In these scenarios, the faster MACD does make more sense, but if you are a longer-term trader, then the normal MACD indicator might perhaps be the better option for you. Alright guys, so the time has come for our second MACD setting. And in order to get this setting for the MACD, this setting is actually not even available on the normal MACD. So what we have to do here is that we need to go up to the indicators tab, and we want to search for MACD and then divergences, or MACD divergence. And we want to go down here to the indicator which says David Tech here, and we do want to open up this indicator. And as you can see, now a new indicator appeared here on the chart. As for the actual settings of this new MACD indicator, they are actually very similar to the normal MACD. We can actually go here to the settings tab of this new MACD indicator, and we can see here that the fast length is still 12, the slow length is 26, and the signal smoothing is 9. And we are also currently using an exponential moving average for the oscillator type and exponential moving average for the signal line as well. So you can see that the settings here are similar to the normal MACD, but the main difference here is that this new MACD indicator will automatically find divergences in the market. And if you guys don't know what a divergence is basically when we have the price going in one direction, but we have a momentum indicator such as the MACD going in the other direction. So as you can see, right now we're looking at gold and we're looking at a 4-hour time frame. But as you can see, right here, the price prints one low and then it printed a lower low. But as you can see here, the indicator we just recently opened automatically predicted that the indicator, so the MACD line, printed one low and then a higher low. And you can also see that this indicator says that this is a bullish divergence, and a bullish divergence indicates a potential reversal to the upside. And as you can see, after this divergence appeared, the price indeed started to go up. So this right here is an amazing indicator, so make sure if you want to add it to your trading tools. Once again, we look a bit to the left here, and now you can see that it says bear right here. This is because this indicator just recently found automatically a bearish divergence. And a bearish divergence is when we have the price printing one high and then a higher high, while at the same time the MACD prints one high and then a lower high. This is what we call a bearish divergence and indicates a potential reversal to the downside. And you can see that after this divergence appeared, we indeed saw the price starting to go down here. Alright guys, so now we're ready to take a look at the third setting here for the MACD. And for this one, we want to open up the normal MACD indicator. So we go up here to the indicators tab and we simply search for MACD. We want to open up the normal moving average convergence divergence. And then we want to go here to the settings tab of the MACD. So press settings. And what we now want to do, this is pretty simple. We want to move here to the styles tab of the MACD indicator, and we simply want to uncheck the MACD line and uncheck the signal line. This is all we need to do for this for these settings, and then we want to press OK. So as you can see, now on the MACD indicator, we only see the histograms. So the mountains here and the valleys of the MACD indicator are called histograms. And these histograms are basically the difference between the signal line and the MACD line. I can just show you real quick. Let's open up the settings once again. Let's for a short while, choose the MACD line and the signal line once again. And you will actually see that the valleys here are the difference between these two lines. So for example, when we have a large difference between the lines, you can see, for example, right here, you can see the difference between the blue line and the orange line is a lot. Then we will have large mountains. And when we have a large difference here on the downside, like we for example have right here, you can see the difference between the orange line and the blue line is a lot right here. Then you can see that we will have a deep valley. So this MACD setting, let's go back here to the settings tab, uncheck the MACD line and the signal line, is basically if you're only interested here in the difference between the MACD line and signal line. And this right here is actually how I usually have my MACD, because I think that one of the most interesting things we can know about the MACD is how strong is the momentum compared to the average. And this is exactly what the peaks and valleys tells us about the price. So the valleys here will give some very good indications about how strong is the momentum right now in the markets. And to be able to understand momentum is something super useful and that you can use in so many trading strategies. So this setting is a very useful one in my opinion. Alright guys, so now we are ready to take a look at our fourth setting here. And to be able to understand this setting, I do want to open up yet another MACD indicator. So let's go up here to the indicators tab and let's search for MACD, and let's open up another moving average convergence divergence. To keep consistency between these indicators, I also want to do the same thing as we did for settings 3. So let's uncheck the MACD line and the signal line for this new MACD indicator. We can also make them a bit larger here so you will be able to see. So now guys, let's use our top MACD indicator here for the new setting. So let's go up here to the settings tab of the MACD. We want to go to the inputs tab here, and we want to go down to here where it says source. As you can see right now, it says source and it says close. This means that the MACD will make its calculations based on the candle closes. So it will take the data points only for where the price closed. But we can actually change this setting. So as you can see right now is close, and you can choose if you want to base the calculations on the open, high, low or close. But what you can also do is that you can go down here to where it says OHLC 4. And let's actually choose this option right here. By choosing the OHLC 4, the MACD indicator will now take into account all the points on the candle. So it will use the open, high, low and close, and that is what OHLC 4 means. It will use all these data points to make its calculations. So now we're ready to press OK, and you will probably see what I mean here. To give you guys a good example of how this works, I want you all to take a very close look at these two candles right here. You can see that both of these candles have very long wicks here. And remember that the bottom MACD indicator only calculates based on the candle closes, while the upper MACD indicator will take into account both the candle closes but also the wick. And as you can see, because we have on this green candle right here a long lower wick, you can actually see that for the upper MACD indicator, which uses the wicks also in the calculations, you can see that this bar on the MACD will be higher than the previous bar. But if you look down here to the normal MACD, you can see that the exact same bar of the MACD indicator will be lower than the previous bar. I really hope you can see this. For the upper MACD, the previous bar is lower, but for the lower MACD, the previous bar is higher. So you can see that the difference here is not huge, but it's still a difference. And as you know in trading, every small change can make a huge difference in the end. But alright guys, so now you know a few MACD indicator settings, but if you haven't already, I highly recommend you guys to watch my video about the MACD indicator, where I talk in depth about how the indicator actually works.